So this is weekly commentary 51, and before we actually start, this is actually going to be, the weekly commentary that kind of is a milestone for us, as this is going to be a whole year of weekly commentaries in this mentorship. So from the whole of last year to this year, this is going to be, a whole entire year of weekly commentaries. Uh, I know it's weekly commentary 51 and not 52. It's because we missed one weekly commentary in June. I was busy and I wasn't able to make it. But nonetheless, this is a year, and you can go back and check all the weekly commentaries, their predictions and the reasons. And you guys essentially now in the mentorship have a whole year's worth of videos, weekly commentaries, all in real time, no hindsight, in how to build a narrative going into the next week. Right now, let's get straight into it. This monthly candle. Remember, we rejected off this bullish fair value gap, right? We have a little volume imbalance here, right? You see how the bodies are not overlapped. Now, the rest of this monthly expansion, which way am I favoring it to expand? Well, we took sell side liquidity pool from the last month's candle and we rebalanced an area fair value gap. And this is inside of a monthly discount if you draw your fib from here to here. Find the lowest point being here, right? And you see how it dipped down into discount and that fair value gap at the discount of the range. Now, from here on your monthly chart, I'm expecting the candles to push higher. I'm favoring the monthly expansion to push higher. Now, when thinking of monthly expansion, you guys need to understand the week of the month that the expansion is likely to happen. I'll give you an example. On a daily profile, right? What time of the day are you expecting the daily expansions to occur? Usually your New York session, London session, right? Just like that on a daily level, when are you expecting your monthly expansion to occur? And it's usually going to be around this time of the month, right? And you can check by your your Forex Factory calendar. Look at the weeks with a lot of news events in it, right? Now we have on Tuesday we have the claim and count for pound, which is one that's going to move pound, and we have CPI for the USD. And if we go to we have core retail, and I believe there's PPI as well. Yeah, and there's PPI on the Thursday. So there's a very stacked week ahead of us. Now, in saying that, I'm still favoring the monthly expansion to be higher. Now, if I'm favoring the monthly expansion to be higher, I should be favoring the weekly and the daily expansions to go higher. Now, it's not every single day is going to point towards, a bullish day, but we're trying to wait for the days for bullish expansions essentially. So now going into the week, I told you guys to watch this fair value gap, right? And now you see how we're still kind of inside that fair value gap. I want to see us exit it, right? I want to see us exit this fair value gap. Now, still keep this fair value gap marked out from here to here, right? Keep this marked out. Old fair value gaps, right? Old bearish fair value gaps become bullish support. So we can come down into this candle and we can find support within it early in the week and we can move off. Consider this fair value gap here as well. Now, with CPI, right, if you go back to the Forex Factory calendar, CPI is going to be early on in the week on the Tuesday. I say let Monday pass, right? Let Monday pass and see the build up towards CPI. I'm expecting Monday to be quite a consolidated day. If you think about the weekly profile at hand, if you have Tuesday high impact news, right, you can expect Monday to be somewhat like your Asian range, right? And an accumulation and CPI to be the mover. Now, if we go to the daily time frame, right, keep this marked down your daily time frame. Now, I want you guys to pay attention here. We had this fair value gap marked out, right? We had this fair value gap marked out. Now, we didn't come quite to the discount, but nonetheless, we exhausted this fair value gap and now we're expanding away. The next local target is this buy side liquidity pool from Tuesday, the 7th of February. Now, this I'm anticipating to be a bullish rejection block. You see how we traded down into it and we didn't take out that candle's low. We came to like around the 50% of the rejection block and we moved away. Now I'm anticipating this to be a bullish order block, and I want to see us make a new leg higher. Take this buy side liquidity pool out and expand higher essentially. If we look onto Euro was very, very clean price delivery. Now if I mark this out, we dipped into the the fair value gap, and now we distributed away. Now, the next candles when I see this is I'm expecting a repricing towards this low. When I see an institutional order flow entry drill, which is this, right? We had this fair value gap, we expanded down fair value gap, dipped back into the fair value gap, move away. That's an institutional order flow entry drill. And when I see that, I expect a rally, right? I expect price to rally downwards. I don't want to see this candle's high get taken out, preferably. If this candle's high gets taken out, my eye will go to the breaker block. But I'm still favoring downside. Now, this is the sell side liquidity pool to consider, right? They're relatively equal with the lows here, right? This candle's low, this candle's low. If you look at it, the low is at 692 and this is at 664, right? They're relatively equal. Still expect a little punch through that on Monday. Now, in saying that, we have this candle, right? Now, right now, there's only been sell side delivery within this portion of the candle. Monday, right? Monday, if Monday creates a fair value gap on the euro, with the candle just opening up and creating a fair value gap from this candle's low to Monday's high, expect Tuesday to, maybe have another institutional order flow entry drill to go lower, right? You can hunt the retracement into this candle's body up until this candle's low and see if you find a rejection away to entertain, short positions on the Euro USD. For Euro Pound, now we've come to the discount of the range and we had a fair value gap, right, from this candle's low to this candle's high, a mitigation block, and we have an order block with the one, two, three down candles, right? Mark this fair value gap out, right? This is the target that you want to see Euro work towards. Now, in saying Euro has a buy side target, that shows you that Euro over pound is going to be the stronger one, and we're expecting a bullish DXY. So what does that tell you? That pound is going to be the weaker one, and funnily enough, pound is the one that has the news events for this week. You see how it mysteriously all lines up, right? How Euro GBP is at a discount of its range inside of, discount signatures like the fair value gap order block and mitigation block, and how we can expect the price to move up higher, allowing GBP USD being the weaker one and the expansionary move. And we have the news events that's lined up for pound and not euro. Now, if you go to pound, same thing, right? When I see this, it's very simple, and the guys are all caught up with the content. Where is the next candle likely to print? We had this candle, right, come into this fair value gap, and we reject away, and this candle moves down lower. The next candle is likely to have an open high low close, and I don't want to see the high of this candle get taken out and work towards this sell side liquidity pool being also on the 7th of Feb on the Tuesday last week. If I go to also the bonds, now with the bonds, right, just to reiterate, you know, a confluence for our bullish framework on the dollar. You see how if we go on the weekly time frame, we had this fair value gap, and you see how we were inside its fair value gap. Right now, you see how we're displaced away. Now, yeah, we're inside this candle's fair value gap. Right now, on the monthly time frame, I'm favoring the expansion of the candle to favor the upside still. Now, it's pretty choppy on the monthly time frame, but my eyes go into this buy side liquidity pool on the US 10-year, and we have CPI this Tuesday for dollar, and the CPI is very CPI essentially measures inflation, and the inflation when we have inflationary stats come out, it's very detrimental to what they want to do with the interest rates and whatnot. With the interest rates, our focus shifts to the US 10-year yield, and you could also look at the US 30, but they're quite similar, right? You see how it's the same buy side target that you'll see on the US 10-year with the US 30. Now, in saying that, with the US economy, if you look at your Forex Factory calendar, they revised a few of the CPI stats. CPI was actually a bit more than what they actually initially released. I think it was by 0.1 or 0.2%. Now, nonetheless, that's still significant. It shows that inflation is a little higher than what they actually released to the public initially. Now, if inflation, right, if CPI numbers come out worse than before, they come out higher, it's showing that inflation is creeping back up. Now, again, how would they combat inflation is with the interest rates. They will just become more hawkish on the interest rates. These things, they're gonna get priced in before they announce it. You see how the DXY is already looking like it's getting ready to rally, but they haven't admitted, or they haven't come clean with how hard they want to increase the rates. I believe that there's going to be the highest interest rates we ever see this year, right? In a very long time. There's people saying 6% or whatnot. I believe it could be 6%. It could be a tiny bit more, maybe 6.5%. If we go to the crypto market, which is what you guys are looking at, for some time, on the monthly, a few weeks ago, I told you guys to outline this rejection block here. You see how it was also institutional order flow entry drill, expansion lower, come back into the rejection block, swept this previous month's high. If we go to the daily chart for it, because I know a lot of you want to entertain cryptos, you're watching this fair value gap from this candle's high to this candle's low. There's something I want to discuss with you guys as well, because some of you trade crypto, and on the weekend, I understand the market is open 24/7 for crypto, but consider this. The weekend for crypto is kind of like your London lunch for your currency pairs, and it's like the lunch period for your indices. The reason we don't trade the lunch sessions, and why I recommend people to not trade the weekend for crypto, there's something called time distortion, right? The candles, and I say this quite often because it's very important, the candles show two variables. It's not just price. When we come here and when we're introduced to the markets, whether it's from someone, if you came from a different mentor, or if your knowledge was just capped at what the crap was on YouTube, they're just focused on price. But it's price given time, right? Now, in saying that, every single candle that prints is not showing a difference in the price of the asset class that you're looking at. It's showing time moving in the market. Now, time distortion is just where price is not being considered and it's just time passing in the market, because candles have to print. They have to print. Given the market is open and is operating, the candles have to print because time doesn't pause. It does not pause unless the market is closed, right? Now, if nothing is really going on with price and it's essentially just chopping, right? How is that shown in the candles? Small candles, right, with, you know, small bodies and larger wicks, or just essentially just a consolidation, just up and down, up and down. For example, if let's go on a 1 hour chart and look at it, right, like this, right? When you're seeing like this, there's a little move up higher. I understand. If you go on a large sample size of crypto and you look at the weekends, you're going to see it's just consolidating and the bodies of the candles are very small. It's because not much is happening with price. It's the time that's moving in the market. And this is where people get chopped up, because it's not, we're trading price. We don't trade time. But time is still an aspect we have to consider for price to be high probability, right? This is the whole reason we avoid the weekend for crypto, which I advise people to, you know, avoid it, and why we should avoid the lunch sessions. The economic calendar tells you when every single big move in the market is going to happen. Prior to this weekly commentary yesterday, what I wrote up for you guys is essentially something I'm going to do for you guys, because it's a lot more fruitful and it's a lot more efficient if I keep the weekly commentaries to just what to expect for the next week. And if in the documents that I'm going to make for you guys, every single week I'll try to do that, shows you the week that panned out and, how you could have made your daily profile, weekly profile going into that week. So for this week, to go back to the dollar, I'm still favoring upside on the dollar, right? Now, in saying that, I use this for my template for my weekly profiling, right? Monday is very lackluster. There's not really much happening there. Tuesday there is. Now I'm expecting, right, Monday to be a pretty small range day and Tuesday to kick it off, right? It's very likely that we can have, Thursday cap the range and Friday to maybe reverse into it, because there's quite a lot of move within the week. Now, this is the high that I'm working towards, but remember, hunt a retracement back into this candles range. It may be a bit, shallow. It might not come down, right? But what you're waiting for is that Judas swing. And it's very, I want you guys to start imagining it like this. You're trying to catch the candle's expansion. In saying you're trying to catch the candle's expansion, you're trying to look at where the candle's low. When you're bullish, you're trying to look at where the candle's low is going to be made. Have you ever been watching a 15-minute candle open, trade down into a fair value gap, and wick away, and it's starting to push higher and push higher, push higher? You see on a 15-minute time frame that wick down, where the low, where the candle is a down candle and is wicking away, that's the expansion. On a daily and a weekly level, that happens a lot slower. What you're trying to do is this on your 5 and 15-minute chart. Once you've seen, that suspect low be made, you're trying to get in with a retracement entry to ride the expansion away from the low or the high of the day. That's how I want you guys to imagine it. Just imagine the candle, wicking away and starting to expand away from where the low or the wick is, and then make a bullish close or a bearish close if you're bearish. That's how I want you guys to start to view it. For the S&P traders, you have an inside candle and you have CPI, right? Leave this market alone. It's probably going to burn a lot of people going into, the new week, and I'm advising you guys to leave it alone, right? This fair value gap early on in the week, you can see, if you get Monday trade into it and reject away, then you could possibly, hunt the rejection away from it. You have your initial consolidation here, right? This is an initial consolidation and you run buy side liquidity now and you're in a deep premium on the weekly. This could be a market maker sell model, but what you're waiting for is look for if this is an institutional order flow entry drill on the daily. If you get this institutional order flow entry drill on the daily time frame, you wick into it and you move away, you have a lot of sell side targets here. One, two, three, and you're trying to make a new low underneath this, right? That's if you get the confirmation from this fair value gap institutional order flow entry drill. This is a whole trading model in itself. If you see this on a 15-minute time frame, 5-minute time frame, and I'll send it to you guys in the document that I made prior to this weekly commentary. Say you have a market maker sell model, right? You have an initial consolidation and you have legs up. Now it doesn't always look clean, but you have a consolidation and you have an expansionary move away from it into a high time frame PD array, right? This all assuming this is all inside of a high time frame PD array, and you get that displacement market structure shift. Once you have a fair value gap and a candle moves away and rejects away from it, and this candle moves away from it, you could find shorts in this candle. Once you trade up into a fair value gap, you can enter under the assumption this candle's high should hold and the next candle should expand downwards. Yes, sometimes you'll take losses in it, but take that trade 100 times. That same trade, the market structure shift, fair value gap rejection away, and enter the next candle's open with your stop loss above, the next candle's, the previous candle's high, or if it's very close, it happens around here, above this high here, and your TP have to the low, take that trade 100 times and tell me if that is not a model you can run for the rest of your life. This is the one thing I fall back to. On chapter 6, lesson 1, this is what I've taught you guys to look for, right? Now, in saying we see this, right, institutional order flow entry drill, we can see this as a rejection block being made. This being an order block, and we can expect a new, low to be made now, right? So we can expect a fair value gap to get left and a new low to be made. Now, look at this on the GBP/USD rejection block, right? We can see this being a rejection block. See how you have to look before the matter. Is this not looking like it can become a bearish mitigation block? 3 candles being an order block, rejection block. It's just about making a new low now. So in saying that, and in making the decision that, we're gonna make a new low, take trades whilst before the new low is made. You see how it's a mental computation, and it's something that I've said to you guys in the Telegram chat. Trading is a lot of decision making, and it's about how well and fast you can make mental computations, and that only comes with development. You guys can run through the content. You guys watching this, you you think you have a benefit of having all the content. I'm telling you, you're at a disadvantage because it's enticing you guys to you think you can finish it fast, right? You can finish it fast. How well can you develop alongside the content is a different story. Just because you learnt the content, it does not mean your brain can straight away sieve out all these mental computations pretty fast, right? The guys that have been here for longer, you've heard this a million times already. We've spoke about this a million times already in private. If you're anticipating a new low to be made here and that these are just a bearish order block and a bearish mitigation block, and that this low is going to be taken and this is your sell side liquidity pool, hunt shorts every single day. Hunt shorts, right? Till this sell side liquidity pool is made, and you're probably going to make a new low, and then may perhaps retrace back into here and make a new low again, right? We have quite a few sell side targets to work with. On the DXY, there's a lot of upside targets, right? I'm expecting an expansionary move higher. This is the first target that I'm waiting for, right? If we do get a full-blown market maker buy model, initial consolidation, and we've said this for around 2 months now since we've been in around November and December, right? These are things to consider. Watch this weekly commentary again, perhaps. Take a note of the time distortion that I said. That's why we don't like to trade inside the lunch period. That's just time passing in the market, right? I'm also making a new lesson for you guys. It's called Finding Your Niche. A lot of you guys will need to listen to that because you get to a point in your trading career where having so many skills is not as good as you think. When you have access to a lot of skills, it leads to a lot of clouded judgment. And I'll tell you why. Having the CBDR, the Asian range, and all of these things, you feel like you want to use all of them. But using all of them is not fruitful. You have to find your niche. And that's what the next lesson is going to be about. Some of you guys prefer perhaps London, some of you perhaps prefer New York. Pick one. Pick one and say no to the other. Now, for some of you, that might be hard. You might just be saying, oh, but then I'm capping myself to trades. Yes, but those are your business operating times. No business runs 24 hours, 7 days a week. Some are open 24 hours, yes. It's just like if you think about a real time, I'll give you a real time distortion example. Some supermarkets are open 24/7. Do they have large transactions or consistent volume throughout the whole entire day? I'm guessing after, it comes to the peak of nighttime and throughout, the dawn of day, it's pretty dead. That's like that's like time distortion. Time is moving. Time has to move. If time stopped in real life, it's like we'll just be paused. We'll be frozen. Time has to pass. But the price, nothing's really happening there. It's just time is moving. That's a real life example that I can give you guys to understand time distortion. Make a note about what I said about anticipating the arrays in real time. You don't need to have this expansion and break a high. These watered down smart money concept traders online, the ones that are just content creators and not traders, they will tell you that you need to break this high for this to become an order block and a rejection block. You need to have a break of structure. No, you don't. No, you don't, because the repricing was already put in. You can anticipate, right, given that your read on price is good and you understand the PDRA matrix. In a bullish context, it came down to rebalance an area of imbalance and now you're moving away. So this is going to probably be a low of the range and you're going to go on to make a new high. In saying that you're going to make a new high, you want to trade the expansion of that high. You're trying to get in and being bullish on dollar, making the new high, and that would, be mirrored into making a new low on euro and pound. Remember what I said here, wait for this fair value gap to see how we move away from it, right? You also have this, this order block, mitigation block. You can see how we move away from it. Right now we're in between rock on a hard place with this order block, how we rejected off of it and we have a fair value gap. Are we going to go long and break the high, or are we waiting to be short of the fair value gap? You see how both are in play. When both are in play and it can be long or short, it's a gamble. And we don't gamble. We wait for the edge to be in our favor. Wait for the market to tip its hand. Is it going to respect this order block and move away? Or are we going to have an institutional order flow entry joint to this fair value gap and move lower? That's going to tell you that this order block's not going to hold. And if bearish PD arrays get disrespected, it tells you that that low is vulnerable. So consider these things, right? So that's going to be it for this weekly commentary. Any questions, of course, ask. I'm going to get cracking on with that new lesson. Just a thing for you guys as well. I'm not in the UK right now. I'm in the UAE. There's a 4-hour difference between me and the UK guys. and there is a whole 9 hours difference between me and the people in America. So if my replies are a bit, you know, a bit slow, it's because when you guys ask your questions, which is usually around the later end of the, night for the UK guys, it's it's very late in the day for me in the UAE, and because I've been here for 2 weeks now, my body clock has kind of adjusted to the times here. So I do reply to all of you guys, but if you guys could just understand that little part that there is a slight time difference between us, I'd really appreciate it. And that being said, I'll see you guys in the next one, and yeah, manage your risk. Let the Monday pass. I've told you guys what to look for. Respect off this, expansion, new lows to be made, fair value gap. Pound has a lot more move to that sell side liquidity pool than euro. So look at pound for the start of the week and perhaps the remainder of the week. Look at pound until euro GBP kind of offers this fair value gap, given that it offers it, right? So until next time, and I'll see you guys in the next one.